president of the United States tweets all of a sudden that he will suddenly impose tariffs on Canada, Mexico, and China.
President will be implementing tomorrow a 25% tariffs on Mexico, 25% tariffs on Canada, and a 10% tariff on China.
Obviously, as currencies start going nuts. Why? Because geopolitics matters. Now, how does it work? Let me show you.
Am I going to impose tariffs on the European Union? Do you want the truthful answer, or should I give you a political answer? Absolutely. I do like tariffs. Tariffs, tremendous tariffs that are massive. To me, the most beautiful word in the dictionary is tariff.
So, first of all, the currency market is made up of two baskets of currencies, high beta and low beta. High beta currencies are the Australian dollar, the New Zealand dollar, the British pound, the Canadian dollar, and emerging market currencies. Now, these are currencies that are considered attractive when global economic growth is looking good. But when things turn south, everyone runs out of high beta currencies into what we call low beta currencies, such as the US dollar, the Japanese yen, the Swiss franc, and to some extent even the euro. Now, these low beta currencies are what we call safe havens. What is a safe haven? A safe haven is simply a term that refers to an asset that increases in value during uncertain times, times of market risks, geopolitical risks, recession risks, anything that adds to uncertainty in markets. Obviously, gold is the most popular, most well-known, but the Japanese yen, the Swiss franc, and the dollar all do well on risk off. Now, you can surely imagine already why this is very important to know, because you need to be conscious of how to move in different risk environments. For example, is shorting the Japanese yen a good idea if a geopolitical conflict is emerging or geopolitical tensions are on the rise? Of course not. But let me show you how it works in practice. Back in 2019, we had a little thing called the US versus China trade war. Not exactly a love story, but all the drama of a Netflix movie show, tariffs flying left and right, economic threats, and a whole lot of chest pumping, particularly, from Trump. Here's the New Zealand dollar, a high beta currency, against what? The Japanese yen, a low beta currency. And you can clearly see two trends, bearish in the first half and bullish in the second half. So bearish during what? Escalating geopolitical tensions between the US and China. Why? Because traders in that context favor a safe haven like the Japanese yen rather than a high beta currency like the New Zealand dollar. But instead, the opposite happens in the opposite context. When tension cool off and things move in a more positive direction geopolitically, in this example, NZD-JPY bottomed and it started to trend up accordingly. That's how geopolitics move markets. So, how do you use this as a trader? In simple, risk off. So when the market is scared, geopolitical tensions, wars, recessions, fears, you go long safe havens. That means buying the Japanese yen, the US dollar, the Swiss franc, and gold. In risk on, so in the opposite scenario, when optimism is high, trade deals, economic boom, whatever, all the good stuff, you target high beta currencies like the Australian dollar, the New Zealand dollar, the Canadian dollar, the British pound, even emerging market currencies, for instance. So, put that way, it sounds a little too simple, and it is, obviously, because the trick here is timing and also understanding exactly what's going on. And that's where staying well updated and well informed is important. Let's go back to our earlier example from the start of the video. The president tweets about tariffs, and it's a threat to impose tariffs on Canada, Mexico, and China. Okay, that's a risk-off trigger, right? It is. Tariffs are obviously no good. It weakens economic growth and threatens manufacturing. It simply means not good for the economy that is being targeted with those tariffs. Because suddenly, for people to buy your stuff from the US, they have to pay an extra fee, and that reduces exports, which over time ends up weakening domestic activity, especially for very export-dependent countries like China or even Canada. I mean, Canada, for instance, exports like 20% of their GDP to the US. So, it matters. With that in mind, what would you do on CAD-JPY? You short it, obviously. Why? Because Canada's tied to that exact headline. I mean, it's the target of those potential tariffs. And the yen, it's a safe haven. So it's the currency that people fly into when things are a bit shaky. Now, Fast forward to February 2025, Trump reinforces that threat.
And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that.
Until on February 1st, he makes the official announcement. 25% tariffs on Canada, 25% on Mexico, 10% on China, all to go into effect on February 4th.
This is confirmation from the president that he does intend to go ahead with the implementation of these 25% tariffs on the U.S.'s closest neighbors and biggest trading partners on Saturday, February 1st. Now, to your point, Alex, he had suggested already that February 1st was kind of a deadline. Is his mind? He suggested that on his very first day in office after his inauguration last week, and it was reiterated by the White House press secretary Caroline Leavitt in her first news briefing earlier this week as well, that February 1st was still the date they were looking at.
Now, February 1st was a Saturday, so markets were closed and we got a big gap at the open, a big risk-off gap, obviously. No surprise there. I mean, it was well telegraphed in advance. So we also saw the move shaping in advance. Because as you know, markets move on expectation. And if the president is saying that he will hit Canada and wherever else with tariffs, then the markets won't wait for the official announcement. They will start moving already in advance. So we got the move already in advance. And then we also got the gap when the actual official announcement was made. Now, what happens next? So now we have two scenarios. Either Trump manages to make a deal to get what he wants from Mexico and China and Canada to delay the tariffs, and at that point everything reverses. Or obviously he doesn't, and the tariffs go into effect and the move is extended further. So what we do, we monitor the headlines very attentively. We keep an eye on the situation to see how it evolves. There you go. Suddenly, Trump announces he's got a deal with Mexico to delay the tariffs on them. Now, he's got a deal with Mexico to increase security at the border. Okay. Why would Canada be any different at this point? So we know, at this point, we know he gets a deal with Mexico. He still hasn't got a deal with Canada. But really, seriously, technical the security issues at the border are more severe from Mexico than Canada. So would it really make sense to get a deal with Mexico and not with Canada? So at that point the playbook was clear. Trump was certainly going to get a deal with Canada too. And in fact, that's what happened. So the Canadian dollar, as soon as that announcement was made, so the delay in tariffs on Canada, the Canadian dollar strengthened on that. And there you go. Which, by the way, as you know, we trade this stuff. If you follow us on our Telegram channel, you will know we went long CAD Swiss franc, expecting this scenario to unfold. And so that's geopolitics for your trading. It's one piece of the puzzle, but it's the framework to understand all type of geopolitical headlines. Conflicts, political tensions, a global pandemic, all of it. It's nothing different from what we already talked about, risk on and risk off sentiments in other videos. It's the same stuff. So the next time you see a tweet, a headline, ask yourself, is this risk on? Or is this risk off? Understand the sentiment and then trade accordingly. And by the way, if it's not clear enough at first sight, if it's not obvious enough at first sight, either ask someone that has more experience than you just to understand what's going on, or just don't bother with it. I mean, don't try to trade what you don't understand. Be humble, and if you don't know what's going on, just try to get informed. And how you can do that, how you can always be informed and updated on what's going on fundamentally. Well, I have done a video on that exact topic, so make sure to give that a watch if you haven't yet.